Hey, what's going on everybody? Jacob here, and on today's vlog, we're going to be reviewing the market update numbers for Durham region as of December 2019. Now, as always, please keep in mind, this is just a general overview for the entire region. Every single city is going to have varying numbers. So what we're also going to do is we're going to put up the actual numbers for each city's breakdown, just so you can get a better idea as to how your city stacks up to the rest of the region. Now, when you're looking at any real estate market, there's three numbers that you want to take a look at first and foremost. That is the total number of listings, what's happening with the inventory in that market. You want to take a look at the sales, what's happening with the actual activity with those listings. And then most importantly, you want to take a look at how much everything is going for, the average sales price. Now, when we take a look at the total number of listings in Durham region as of December 2019, we saw a decrease of 21% from the same point a year ago. The numbers do vary from city to city as well. But when you look at it on an annual basis, when you look at 2019 versus 2018, we actually saw 2% more listings overall than the year prior. Now, when we look at sales, we actually saw an increase of 16% in total number of sales in December. Again, the numbers vary throughout all of Durham region. And then when you look at the year-over-year basis, we actually saw 2019 have 19% more sales than the 2018. Now that's a huge discrepancy. 2% more listings in 2019 than the year prior, but 19% more sales. Now, just through basic economics, you should expect property values just to increase because demand is outstripping supply. And when we look at the actual sales price, that's what we see happen. We saw average sales prices jump to $640,000 in December of 2019. Now, this was a big surprise to everybody because December is usually a little bit of a slower month. However, inventory did slow down. We actually did see a decrease in the total number of listings, but activity kept staying strong, which was quite shocking to actually. You don't usually see that. However, interesting fact, we actually saw demand, total number of sales, outstrip supply for the first time all year. And that happened in December. Nobody was really expecting that. Those are the three basic numbers that you want to look at any given market, but then you want to go do a deeper dive. You want to take a look at months of inventory, sale price to list price ratio, sales to new listings ratio, and that's what we're going to do right now. So total months of inventory has actually gotten much tighter in December of 2019 than a year ago. We're actually down to 1.7, which is really tight. Anything under 4 months is deemed to be a tight seller's market. What is months of inventory? If you were to stop listing homes, but kept selling at the current rate that we're selling at, how long would it take before we were out of inventory? As I mentioned, anything under 4 months is deemed to be a seller's market. 4 to 6 is balanced. Anything over 6 is a buyer's market. We were at 2.9 months last year. We're at 1.7 this year. That's very tight. That means that in a month and a half, we could see inventory drying up. That was the numbers we were seeing in 2016, 2017 as well. So that's something to keep in mind. However, again, we're in December. We haven't seen demand outstrip supply the way it has last month. So will this continue? Who knows? We're going to keep a very close eye on that. Days on market. You've gone from 34 days on market to 28. Again, 28 days on market is still fairly long. You don't want to be listed for 30 days, guys. You want to have your house on the market and sold within 7 to 10 days, which is why we put so much effort and time into preparing a listing to go on market. Putting your house on the market can be very frustrating. Unfortunately, this is something we talk to a lot of our sellers about, and we explain to them, look, it's something that we can't control. One of the biggest issues I've noticed with listing properties is the fact that there are lots of agents who will book a showing and then not call to cancel. I sold my home last year and I dealt with the exact same problem. Last year, we had a seller. They had 2 dogs, 3 kids, both had full-time jobs. So you can imagine running around, getting the house ready, getting all the kids ready, getting the pets out of the house for the showing. You're pretty much, usually they're driving around, they try to go do something, but sometimes you're basically just sitting outside waiting for these buyers to show up. And then you realize that they didn't even come, or they might show up an hour after their showing was booked. It can be an extremely frustrating situation. And there's really not much we can do to prevent that from happening. We do put in our showing instructions. We warn the agents, but there's unfortunately a lot of unprofessional agents out there, and it's one of the more frustrating aspects of selling your home. So again, the last thing you want to do is dealing with that kind of stuff for a month straight. Okay, so even though the average days on market has tightened up to 28, that is still a lot longer than you're shooting for when you're putting your house on the market. Average sales price to list price ratio is sitting at 99%. That means that a majority of the homes on the market are selling for 99% of asking. It's actually a great question to ask any agents you're going to be interviewing is, what was your average days on market for your past listings, and what's your average sales price to list price ratio? If somebody's telling you that they sell most of their listings for 97% of asking, they're not very good at pricing their properties. And the lower the sale price to list price ratio is, I'm guessing the longer their average days on market is going to be as well. These are things you should be really considering when you're listing with somebody. Another stat to be looking at is the sales to new listings ratio. So out of 100 listings that are coming to market, how many are selling? Usually anything over a 60 is deemed to be a seller's market. December, we were actually at 121%. So we actually had a lot of leftover listings from November, carryover listings sell as well. So again, I don't know if this is going to be the trend going into 2020. It could have been an anomaly that inventory slowed down, but activity just kept going strong for the month of December, which threw these numbers off. So this is something we're going to be, keeping a very close eye on going to the near future, just because these are numbers that are reminiscent of the 2017 numbers. So if we continue on this trajectory, you're going to start seeing multiple offers coming back, which we are noticing happening right now. You're going to start seeing it going back to being a seller's market again. So it's really important numbers to know of. A few of my main takeaways from these numbers is that we look to be on the cusp of a seller's market again. This is the first time ever that we have maintained our average sales price to over $600,000 for Durham region. It's been 10 months straight of average sales price in Durham region staying above $600,000. The only time, or the next longest time this has ever happened, was when we were above $600,000 for 8 months. But that was during the crazy run-up of 2017, and we all know what happened then. We saw property values plummet over 20% in 3 months. We went back under $600,000. Now, since then, the property values have steadily gone back up. The way real estate values should be is slowly but surely. It should never have gone up the way we saw the run up in 2017. So my prediction is that we are never going to see the average sales price of Durham region under $600,000 again. I think that's behind us now, and you're going to start seeing property values slowly but surely keep creeping up. But my guess is that we're not going to see under $600,000 for Durham region. Now, there are still areas that you can still get under $600,000, but when you look at a map of the areas surrounding the GTA, we're still very underpriced. A great bang for buck. We're going to continue to see a lot of growth from a lot of people coming from the GTA coming out to Durham region just because they see what value Durham region has to offer. So a few days ago on Instagram, I actually posted a question asking everybody if you considered owning a home a form of investing. And I was actually kind of surprised with the answers because 60% said yes, but another 40% said no. And I do kind of understand their perspective. There are a lot of people out there that believe an investment should be something that's going to generate you cash flow. If you're buying something with just the anticipation that it's going to be worth more down the road, that's actually speculation. However, I'm of the belief that real estate ownership is a form of investing, and I'll explain why. Now, again, I do understand where they're coming from. The Grant Cardones, the Gary V's, there's a lot of people out there that actually talk about how owning your own home is basically a liability because there's a lot of stuff involved in home ownership. It costs quite a bit of money. It's not a straight up investment, which I do agree with. There's quite a bit of work involved in being a homeowner. However, you're not just buying a home for the investment aspect of it, which I'll get to, but there's a lot of other benefits involved. While there are some reasons why you should be renting, which I'm going to actually be dropping a video about that in the next couple weeks, renting does make sense sometimes. Owning a home offers you freedom. And here's what I mean by that. Personally, I have 2 dogs. There's Argo and there's Ollie, and I love them to death. And I could never picture living somewhere without them being in the house with me. But as a renter, I wouldn't have that freedom. There's a lot of landlords out there that would not give me the right to rent their property. They wouldn't accept me as a tenant. Even if I had amazing credit and I had made a lot of money, they would still probably say no because there's a lot of landlords out there that have a no pet policy. Now, there's a lot of gray area involved in that just because landlords technically aren't allowed to evict you or say no to you based on you having pets. but they are allowed to ask you initially. And I wouldn't want to start off the landlord and tenancy relationship lying to them. So, you've got to keep that in mind. If I own my own home, I can have my pets. Additionally, with the freedom aspect of it, if you're going to rent, if you're going to do any renovations as a renter, you have to get written consent from your landlord. And really, why would you want to upgrade the property if it's not really going to benefit you in your pocket? So ownership allows you to have the freedom to do what you want and without having to ask anybody else. That's first and foremost. But while you're doing that, while you've got the freedom to have the pets that you want, to paint, to renovate, to do the things that you want to do, you're going to be passively investing. Owning homes or owning a primary residence is the first step. It's the bottom rung of real estate ownership and investing in real estate. You are obviously expecting the property values to go higher in the future. So there is a form of speculation, but you would never buy real estate if you expected the property values to be worth less in 5 years than it is worth now. But additionally, even though it's going to be a little bit more expensive than renting, you're passively investing in the fact that you're paying down your mortgage. If you're renting somewhere for 5 years and you look back, you've gained zero equity. All that rent, the $1,500 a month times 12 months, which is going to be about $18,000 a year, times 5 years, which is probably about $90,000, you've got $0 of that. Whereas on the flip side, with home ownership, if you've owned a home, granted, it's going to cost you a lot more. I actually going to do a video about this, talking about the actual numbers and doing a side-by-side comparison. But I can tell you now, you have built up some sort of equity. I don't know how much it would be, but you're going to build something up in addition to the fact that your property values went up, you've paid down your mortgage, you're going to have equity, you're going to have a chunk of change that you otherwise wouldn't have had. So that's going to be the first level of real estate ownership or real estate investing. I do recommend everybody to really strongly consider home ownership for a variety of reasons. If you've got any questions, please never hesitate to reach out. We're going to be doing a deeper dive in the near future, talking about all the different types of real estate ownership and investing and all the opportunities available to you out there. But it is something that everybody should be considering, just because it is in my opinion, one of the most important aspects of financial stability and long-term planning is owning real estate. All right, so hope you guys enjoyed that. As always, if you've got any questions, comments, any topics that you want to hear about, please never hesitate to reach out. All my contact information is listed below, or just shoot me a DM. All right, guys, hope you enjoyed that. Until next time, have a good one.